Investing in ETFs is going to be the most powerful and easiest strategy to invest your money in the stock market. ETFs are what I only invest in the stock market, with almost $90,000 invested across all my investing accounts. So I could be a multi-millionaire one day and just build wealth over time. Now let's take a compound interest investing calculator to see where $90,000 will get me over time. With my $90,000 invested right now, if I continue my $3,000 per month contribution to my ETF investments and I invest for the next 40 years near retirement with dividends reinvested, in 40 years I will have over $22 million, which is absolutely insane. Which is why you need to be investing in ETFs. Because in this video, I'm going to be going over exactly how to properly invest in ETFs as a beginner, as a thank you in a free course for being awesome. I'm going to be covering a wide range of topics such as what is an ETF, ranking the best and worst investing apps or platforms, how to choose an ETF, a step-by-step walkthrough on how to even buy an ETF, how to avoid fund overlap in ETFs, the importance of reinvesting your dividends, and finally, the best investing account types and order to invest your money for tax efficiency and the best benefits. So if that all sounds good to you, let's get started. For beginners, what exactly is an ETF? Now, an ETF stands for Exchange Traded Fund, which is basically an investment that's offered on the stock market, and it holds a ton of stocks inside of the fund. There's the company Apple that is traded on the stock market. You can buy one share of Apple and technically be an investor in the company. This could be great because Apple could go up and you can make a bunch of money. But if something happens with the company's stock you're buying, like a bad earnings report, declining sales or revenues, or maybe even the company is cutting a dividend that it pays to the shareholders, then this could lead to the company's stock falling as a result. Like Tesla this year, with the economy not going in their favor, leading to a significant decline in their share price. Where if you had $100,000 invested in Tesla this year, you could kiss $30,000 nearly goodbye if you had invested in Tesla or just sold out of it. But if you had $100,000 invested in an ETF like Vanguard's VOO, where Tesla is a top holding inside of the ETF, but since VOO tracks the S&P 500 index, which has 500 different stocks inside of the fund, just because Tesla went down a ton doesn't mean the ETF did, because it went up nearly 12%. So you would have actually gained over $12,000 in returns if you had that $100,000 invested into a broad market ETF like VOO, and you really weren't relying on one stock's performance, in this case 500 different stocks. An ETF is going to be decreasing your risk compared to buying an individual company's stock. And ETFs are going to be generally more diversified than buying an individual stock, which will also decrease your risk. Now, both of these will lower your chance of losing money in the long run and instead have a higher chance of making you money in the long run. Before you can even buy an ETF or any stock, you're going to need a brokerage account, or basically an investing platform or app. Now, I personally use Vanguard as my all-in-one investing platform, where they have my Roth IRA and individual taxable brokerage account, but three of the best investing platforms that I recommend anybody to choose if they are a beginner is going to be the big three of Vanguard, Fidelity, and Charles Schwab. Now, I have ranked some of the best investing platforms. Now, as you can see, number one is going to be Fidelity, because I am not biased, even though I am a Vanguard investor with all my assets with Vanguard. I like the companies in the top 5, especially in the top 3, like E-Trade and even Interactive Brokers, because they're just that good. Now, the companies below the top 5 ranking are good-ish, but I don't like Robinhood especially. Get a real brokerage account like those in the top 5. Now, this ranking system was based off some things like having no fees for having trades or just investing in your account, as well as having no fees to access high yield on your buying power, as well as having a beginner-friendly user face, a wide range of investing products and accounts, as well as having great and excellent customer service in case you have any questions about your account or just in general. Now, if your investing platform is not on this list, then I personally haven't used them yet, so I'm sorry about that, but they're some of the best investing platforms for beginners. What ETFs should you invest in? Now, this is a very tough question, but I'll do my best to narrow it down for an ETF that you could choose to fit your investing goals and investing style. There's over 9,000 ETFs to choose from. Here's some of the best I would look into and for you to do more research on, like dividend ETFs, growth ETFs, and broad market ETFs are the three ones I would look into as a beginner, especially broad market ETFs. And if you want to get more specific or more fancy, you could choose something like bond ETFs, pure technology ETFs, international ETFs, covered call ETFs, and you get the point. But I made a video going in depth of three of my favorite categories of ETFs, like the dividend, growth, and the broad market ETF category, so go ahead and check that out for more information. But in a nutshell, dividend ETFs are going to be ETFs that primarily focus on paying a dividend. A dividend is real money that a company pays out to its shareholders, also known as you as the investor. Why people love dividend ETFs is because of the predictable cash flow you will receive from the dividend. It provides good returns. They're generally less volatile than growth ETFs and broad market ETFs, and it can even serve as a great complement to any ETF portfolio, especially to a growth or broad market ETF. Broad market ETFs are going to be ETFs that track a certain market or index, like Vanguard's S&P 500 ETF VOO tracks 500 of the largest companies in the United States economy. Total Stock Market ETF VTI tracks all the stocks in the United States, so thousands of them, and Vanguard's VT tracks every stock in the world, hence it being a world index. Why people even like broad market indexes or ETFs is because they are really hard to beat. They have low expense ratios, great returns, long track history of high performance, and they provide insane diversification. Now, this is not financial advice, but as a beginner, I would recommend researching and going into first a broad market ETF. Lastly, growth ETFs. Think of them like broad market ETFs, but on steroids. They provide high growth in that you are investing for high returns than broad market ETFs and dividend ETFs. Growth ETFs typically invest in tech stocks. Here is a quick list of some of the best ETFs for every category, so go ahead and do more research on them if one piques your interest. Personally, my three favorite that I owned are Vanguard's S&P 500 ETF, VOO, QQQM, which is a NASDAQ 100 ETF by Invesco, and DGRO. Now that you've chosen your ETF or ETFs of choice, now it's time to buy them. I'm going to teach you exactly how to properly invest in your ETF using a method called dollar cost averaging. Dollar cost averaging is a strategy of investing a fixed dollar amount on a regular basis regardless of the share price. The fixed dollar amount could be anywhere from as low as $5 all the way up to, I've seen, thousands of dollars or more. And by a regular basis, I mean something like daily, weekly, bi-weekly, monthly, and you get the point. Now, I personally buy my ETFs on a weekly basis. I love dollar cost averaging or DCAing because it lowers my stress level of investing in my ETFs and timing the stock market. Here's a couple of examples on how to properly dollar cost average. As you can see, looking at this chart, it says for us to buy on the way down of our ETF. I'm assuming this is a daily investment, and as well as to buy all the way up. If we take a look at a growth ETF like VOOG, which is an S&P 500 growth ETF, I would personally dollar cost average into this ETF by looking at this chart like this. See, it's going to be buying regardless of the share price. Now, if you want to follow exactly when I buy my ETFs of around $500 to $1,000 every week and be alerted on when I buy my stocks and even have other investing perks and access to me, you can check out my Gold VIP membership group in the link in the description or the pinned comment in the comment section of this video and join other investors on the same path to create wealth. Moving on how to buy an ETF on an investing platform, I'm going to be using Vanguard as an example of how to buy an ETF on this platform, but this step-by-step walkthrough could be applied to pretty much any investing app or brokerage. Now, once you have your money on the investing platform, you want to go ahead and click either the search button or transaction button to find any ETF depending on the platform. Once I do that, then I'll go ahead and click buy, which will then start a new trade. Then I'll click on ETFs or stocks. Then I'll select my investing account. In this case, I'll do my Roth IRA. As you can see, I already transferred money into this account from my bank account, and then make sure the transaction is a buy transaction and not a sell. On the symbol, this means what's the ETF ticker. In this case, you're going to be typing in VOO because that's the stock that I'm going to buy. And on your screen is the exact price that VOO is trading at, and then I'll enter the amount I want to buy. I'll go ahead and opt for the exact dollar amount, so I'll then buy $100 and make sure the order type is a market order. Once that's completed, click preview order, and if all that looks good to you, then click submit, and boom, you are now an investor in your ETF of choice, and it's that simple. Fund overlap. Now, fund overlap is when two or more ETFs have overlapping positions. As in, the ETFs both have the same exact stocks inside of the fund or have stocks within the same sector, hence it being overlap. Now let's take a look at an example with VOO and VTI on ETF Research Center, and as you can see, the fund overlap by weight is the most important thing, and it's at 86% overlap by weight. These ETFs have a high amount of fund overlap as a perfect example. Now, fund overlap is not a really bad thing, but it might create some unforeseen risks and reduce your diversification. Now, to clear the waters, no, you are not going to get worse returns if you own both VOO and VTI, but you could be more diversified if you use that money elsewhere and chose to invest in another ETF, like comparing VOO and SCHD, which has a fund overlap of the two of just 8%, or even better, a small cap ETF like AVUV with 0% fund overlap. Reinvesting your dividends. If you really want to see higher returns in the long run and just retire earlier by investing your dividends back in your portfolio and not taking it back as cash. On your screen, you'll see the power of reinvesting your dividends, and you could really accelerate your returns way faster than if you took the free money of that dividend. And you'll always have to pay taxes on that dividend unless you have it in the proper investing account. Which brings me to my last segment, and that's going to be the best investing accounts and order I would invest in ETFs. Step 1, I would first max out a 401k investing account up to your employer match. Now, a 401k account is a company-sponsored retirement account in which you as an employee can contribute a percentage of your income. Now, companies incentivize you as an employee to contribute to your 401k investment plan by offering what's called a match from anywhere from 1%, and my company personally does a 7% match. So let's say you make $100,000 a year and your company offers a 5% match. So 5% of $100,000 is $5,000. So in any given year, if you contribute $5,000 to your 401k, assuming you have that same salary, then your employer will match that and invest an additional $5,000 on your behalf. So it's literally like getting $5,000 of free money. Now, in a 401k, I would always keep it super simple because this is for your retirement and you don't want to F with your retirement money. So I would keep it simple in a broad market index fund or a target date fund. Now, 401ks are also tax deductible, so they will reduce your tax liability come tax season, so you're welcome. After I max out my 401k up to my employer match, I will then fully max out my Roth IRA. Now, for those wondering what the heck is even a Roth IRA, on Vanguard's website, it says that a Roth IRA is an individual retirement account that offers tax-free growth and tax-free withdrawals in retirement. Roth IRA rules dictate that as long as you've owned your account for 5 years and you're age 59 and a half or older, you can withdraw your money when you want to and you won't owe any federal taxes. So please take advantage of this account to avoid paying taxes. Why I always recommend beginners to invest in a Roth IRA is to, of course, save on that tax money and avoid donating it to the IRS. So you won't pay any taxes on your dividends, which is the most common form of taxes in your stock account if you don't sell your fund, because dividends will be paid out either monthly if you have that covered call ETF or quarterly depending on what ETF you have, like growth ETFs, dividend ETFs, broad market ETFs. They all pay some sort of dividend. So keep that in mind and you're welcome. And for Roth IRA, like I said, for a 401k, don't F with this account because it is for retirement. Don't be super risky because you don't want to just implode your retirement. Be pretty safe like a dividend ETF or maybe a broad market ETF, etc. And step 3 is to finally invest the rest of your money into your taxable brokerage account. Shout out our Gold VIP members, a part of my YouTube membership group. And on your right is their top 3 favorite stocks. I love you guys so much. Thank you for supporting the channel. Now, with all that in mind, that wraps up this video, guys, on how to properly invest in ETFs for beginners and a free comprehensive course for you guys because I love you guys so very much. Now, if you guys like this video, please give it a like because this cute puppy did, and comment down below what ETFs you are investing in for retirement, or maybe if you learned something new in this video. Now, if you guys like this video, you're going to be liking some other videos right here and right here that I highly recommend you go check out, especially this one for some of the ETFs that I talked about earlier to find out some more information. Now, I love you guys so much. Continue to crush in the stock market and take it easy. Peace.